Hey, it's Mike Browse, Reverse Mortgage Advisor. And on today's video, I wanted to talk about three things with regards to the line of credit that's offered through a FHA-insured home equity conversion mortgage. And I wanted to say that at the beginning of the video, I'm interested in what you're interested in. If you have any questions about what's been talked about on this video, if you'd like to comment, if you'd like to give it a like, please do that. So here we go with talking about the line of credit. Now there's basically three things that I want to talk about here with the line of credit, and they are liquidity, a reasonable rate of return, and zero tax implications. Now, let me preface these comments with the fact that I am not a CPA, nor am I a CFP, but I'm a licensed mortgage professional. So, with regards to the line of credit that can be taken out using a FHA-insured reverse mortgage, number one is liquidity. Liquidity means that most of the time, if you were to try and get a refinance or a home equity line of credit, you would have to prove that you were able to make the payments. Well, the unfortunate part about that is a lot of times when you need the money the most, you're unable to access it because of any number of reasons. But the number one reason for foreclosure in America is when people go out on a physical disability. Okay, so one of the reasons you might think about getting a line of credit, even if you still are working, is the fact that you don't have to worry about figuring out how to get the money once something has happened to you. It's there and available. And oh, by the way, the amount of money in the line of credit has nothing to do with the value of the home at that point. And that has other pretty impactful considerations in of itself. Number two is the line of credit has a growth component. Can't really talk about a rate of return because you're not experiencing any, growth, not growth, but you're not experiencing rather a return. It basically, as we've talked about in another video, is that your capacity to borrow more is how a line of credit works. And I'll try to reference that in the notes. It takes a little deeper dive into that. But the fact of the matter is that it is growing in a positive way, and it grows larger over time. For instance, if you had a $100,000 line of credit at 5%, at the end of 12 months, if you didn't take any of that money out, you would have $105,000. Okay? It's a 5% growth on that total amount. The third and final thing, which I think is very impactful, again, check with your CPA on this, but the growth inside this line of credit typically has no tax implications on it. So, if you consider that when you have an investment and you earn money, in other words, there's capital gains on that investment, typically, if it's a investment that happens before you're taxed, you're going to be taxed on that money when you take it out. If it's after-tax money that's going into that investment, any growth in that investment, you're taxed on as capital gains. So the growth inside of the line of credit on a reverse mortgage typically has no tax obligations on the growth part of it, because technically it's not a rate of return. It's basically enables you to access more money inside that line of credit as it grows. So I hope this was helpful today. Each one of those things I mentioned, the liquidity, the growth and the zero tax liability could all be broken up, and we could spend a couple hours on each one of them. But this was just kind of a snippet, maybe for some of the financial planning community or others that are helping manage money, such as wealth advisors. So to summarize, with a line of credit, you have liquidity. It means you're able to access it whenever you need to. Number two, it has a reasonable growth rate. And number three, zero tax liability. So I hope this helps today. Hope you got something out of it. And as I said at the beginning of the video, go ahead and give the video a like if you like it. Comment on it. And as always, if you have any questions, give me a call. I'm giving you my direct line, 707-888-8230. You can also text me at that same number. That's all for now, and we'll see you next time. Bye-bye.